And we are live.
Morning, fellow participants, consultants, and investors. Because of the pandemic, which started to spread ferociously since March last year, the world economies face challenges never seen in history, perhaps except during the Spanish flu in 1918. I'm not referring to an insect, but the economic structure back then was very different. We might not even have an institutionalized UT industry in Malaysia in 1918. While the pandemic decimated many industries, such as airline, leisure cruises, tourism, retail, and the corresponding real estates, the unit trust and fund management industry in Malaysia saw unprecedented growth amidst the restrictions of movements and lockdown. Hence, this session's aptly titled Every Crisis Breeds Opportunity. We have the pleasure of meeting Kaleon Leong in Rahan, CEO, FIMM, accompanied by two industrial veterans, one Munirah Khairuddin, Executive Director and CEO of Principal Asset Management Berhad, and Mr. Danny Wong, CEO of Areca Capitals and Berhad, to expound on this journey and their journey through this seemingly volatile but very interesting period. Prior to this annual convention, FIMM has done a pretty thorough study on the industry and its player. I would start today's discussion with some high-level findings of the survey, after which Encik Kaleon will be diving deeper into the survey findings. After his presentation, we will invite Munirah and Mr. Danny Wong to join us in the panel discussion. Without further delay, let's get on it. Okay. As the title aptly says, every crisis breeds opportunity. If you know a bit of Chinese, you know the Chinese word, the Chinese phrase of crisis. It has got a character of danger and opportunity in it. And we saw it in, I think, since last year. I think many industrial players, many fund houses experience unprecedented growth. Okay, their AUM just grew by a very, very big margin at the back of very, very low interest rate environment. Okay, let's move to the first slide. Let's move to the second one, sorry. Okay, these are the industrial statistics, a snapshot of 2020. Okay, over 12 million customers in 2000, okay? And that's 5 times increase from 10 years ago or 11 years ago in 2010. And 80-20 rule doesn't really apply here. Okay, less than 20% of the high net worth individual and corporate institutions account for 55% of the net asset value of the funds. Okay, what is it telling you? I mean, everybody is going for this part. I mean, this particular part of the cake. Okay, 84% of the unit holders held investment between 1,000 and 50,000. So the mass is still you wouldn't call them high net worth individual, but they're probably mass affluent. Okay. And there were 8 times increase in investor below 35 years old since 2010. Okay, and I'm staring at the number and thinking of my children, thinking of all the young adults. They are entering the workforce for the very first time. Okay, they are one big market, and very pretty soon, demographically, they're going to dominate. The Gen X, you know, the boomers will probably have to make way. Okay. And 33% of the members or distributor provided online access to customer. Only 33%, not a very high number in my honest opinion. Okay, and 9.2 million customers have online access in 2020 compared with 331,000 in 2010. Okay, well, what is the number telling you? Okay, the customers are growing a lot warmer to accessing online portal, doing transaction online, and essentially right now, you know, we're having a Zoom seminar, you know. Okay, next. Okay, when I go through this, remember, these are the responses from industrial players. These are the experience they learned during the pandemic. Okay, now industrial experience in 2021 and future outlook. Many responses are coping well. Okay, they are coping well. They are staying at home, but they're doing everything online. And I myself, before the pandemic, I've never bought anything from Shopee, but now I'm a habitual Shopee shopper right now. It's just so convenient. Okay, so audience, I mean the investors, consultants, and fund houses are getting used to it. In fact, before the pandemic took place, a lot of houses are already thinking, okay, robo advisor is coming, so how do we deal with it? Okay, so a lot of houses, including ourselves, have really started to think a bit longer term and try to automate the processes. Okay, notwithstanding, those who express concern were due to the following factors. Okay, restricted customer service activities. If you're talking about the millennial, I think it's very easy to ask them to go online, to open the portal, to sign up and all that. But if you're talking to the people who has got the money, the boomers and the so-called Gen Xers like myself, okay, I'm not implying that I have a lot of money. Okay, what I'm saying is this particular category of the customers is the end of the career, they've accumulated quite a bit. Okay, they are more comfortable speaking to a person, either face-to-face, over a phone and all that, and not talking to a machine. Okay, so that has hindered some of the, say, consultants to maybe meet the more wealthy, okay, more affluent clients and close sales. Okay. Over reliance on face-to-face, I just mentioned it. Okay. Lack of digital solution. We look at the number, right? It's 33%. Only 33% of the players offer digital platform, digital client experience. Okay. Four main focus in 2021 and the next 2 years. Okay, upskilling consultants. We have been hearing this over and over again. Consultants with margin compressions, with robo-advisors, onslaught of robo-advisors. Consultants need to upskill themselves, okay, because they are charging a front end, they are charging management fee and all that. So they need to justify why the customer should not go straight to the robo-advisor or through the online portals to buy and sell funds. Okay, expanding product offering. Okay, we have a lot of products now, but I think there's still room to be expanded. Okay. Managing, mitigating risks relating to uncertainty caused by pandemic. The pandemic took everybody by surprise. Okay, never in our life could we expect the entire economy to shut down. Okay, so these are the concerns. If you were to have touch wood, if it would happen again, how do we deal with it? Okay. Managing and funding, essentially system enhancement. I think we are talking about IT here, or the infrastructure of the company to deal with maybe a potential tough time going forward. Okay, SRI ESG initiative, something that we have has come to the forefront, has come to the center stage. If you speak to, it is very difficult to speak to a foreign investor without touching on these particular issues. Okay, adoption of SRI ESG is growing, and 60% of respondents currently integrate ESG principle into their investment process or distribution approach. Okay, another 24% is going to do it. The challenges in this area, investors awareness. I think when I buy a fund, equity fund right now, I probably think of what is my return. Okay, I buy a bond fund, what's my return, what's my risk. I don't think investors nowadays are fully aware that ESG initiative has seeped into the fund management industry and seeped into the psyche of some of the more probably younger or more informed investors. Okay, lack of standards, okay, and benchmark, limited investable universe, and limited talent. Okay, it is a very, very new area. So how are there enough people, are there enough talent in the industry to support a SRI ESG initiative? Okay, to overcome the above challenge, okay, regulatory support in terms of issuing standards, okay, and benchmark, more standardized procedures and information in regards to that. And when the fund houses will launch a fund, when you say this is an ESG fund, do you really mean it? Okay, so I think investors need to know. Okay, next. Initiative to Sharia compliant fund. This is a very, very big area. Our company is also looking at this this area. I mean, beyond the ASB, ASN, there is a massive booming market for Sharia compliant fund. Even non-boomies they can invest in this particular space also. Okay, so the respondents mentioned that they need to increase the product offerings spread for the Sharia compliant fund. And on the demand side, we also mentioned we need to create platform, be it digital or maybe brick and mortar, to enable, to reach out to far corners of Malaysia to tap this particular market. Okay, this is an interesting one. Competing financial products. Okay, there are ETFs, there are equity funds, there are managed portfolio, digital assets like Bitcoin and all that are competing with UT. Okay, the same may compete with PRS, but PRS has got very unique features, the lockdown plus tax incentive to basically compete with those products. Okay, in ensuring the UTS and PRS remain competitive, okay, there are areas that that can be improved on. Okay, the quality of the price, quality of the products, okay, enhancing essentially customer experience. Okay, understanding investor behavior. Okay, that's something that we have done a little bit of study on. Okay, how do millennials make decisions? What is the risk profile? What is the risk tolerance? Okay, that we have to understand, because millennial is going to be a bigger chunk of the customer base going forward in the next 5-10 years. Okay, I'm done here. Okay, sorry, I've taken a bit longer. I'm going to pass the podium over to Kaleon. He's going to deliberate a little bit further on into the findings. Okay, Kaleon, over to you.
Thank you, Steve. Good morning, Steve, panelists, and all virtual audience. I think a lot have been said and shared today about this survey that we did recently. And I don't really want to go into the details because we are going to upload it on our website and you can actually download and read it. But what I want to touch or do some justice to it is basically on the behind the scenes activities that led to this report. So this report was actually released in conjunction with FIMM's 10th year anniversary as an SRO. We were granted this self-regulatory organization status way back in 2011, and we have spent 10 years working as an SRO. So we felt that to mark our 10th year anniversary, it would be good to have a snapshot of the industry. This is akin to in other jurisdictions where either the regulators or fund management associations come up with an industry report. So at this time, during the pandemic, we felt that it was good to capture the then, as in a 10-year throwback, the now, as in a pandemic overview, and the next, as in what does the future holds. So that's where we came out with this report. And additionally, it is in line with our goal of elevating our stature as a thought leader and market advocate. So after doing this report, after gathering all the feedback from our members and distributors, thank you very much. And what we have discovered largely is there has been a lot of changes that has happened over the last decade. Thankfully, they were mainly positive and encouraging ones. So if you read the report, you will see where are the areas for improvements and the opportunities that people can capitalize on. And by people, I do mean not just our members, but also consultants. Ironically, 10 years ago, one of the top grossing blockbuster movies at that time was called Contagion, which was about a pandemic. Okay, so that made a lot of money. In fact, I think it made 2.5 times more than what they spent to film it. But sadly, we now have a case of reality imitating fantasy, where we have that unfortunate real-life experience of living in a pandemic situation for the last 20 months. Fortunately for us, the unit trust industry has not been in a pandemic state or a catatonic state or in any way bad over the last 20 months, as evident by the growth in NAV and the growth in number of investors. But if we go back a bit further to the last decade, as Steve has shared earlier, the number of customers or unit holders accounts have increased by 5-fold. And what's very interesting here is that it's mainly driven by numbers that we got from nominee accounts managed by institutional unit trust agents. Of course, if some of you all may want to reconcile this 12 million number with what you see on the Securities Commission's website, where you have 22 million unit holder accounts, there's obviously a discrepancy because, number one, our survey is based on feedback by 70% of our members. Number two, those statistics there does not cover unit holders that are held by way of nominee accounts. So the good thing here is that for decades, we are more used to looking at direct holdings within UTMCs. But now we have a new set of numbers, and I would like to call it a pocket universe, which offers a new dimension of retail investors involved in the UTS ecosystem. So if you were to look at those numbers on SE's website that says 22 million, now with some granularity as to what is within the nominees account structure, you should be able to add in another 10 million accounts, which give you 32 million. Of course, Malaysia has a population of 32 million, and that doesn't mean that if you throw a stone, you definitely hit a unit holder. What it means is that one unit holder can have more than one account. But the good thing now is we know that the universe is larger, and there's a larger pool for everyone to tap on. Okay, next slide, please, Joey. Sorry, Joey, the previous slide again. Yes, this one, thank you. Okay, if I go back in time again, one of the chart toppers a decade ago was Bruno Mars' The Lazy Song, which sold 6.5 million copies worldwide. Thankfully, the song title does not reflect the mood of unit trust investors over the last decade, as their investment behavior wasn't lazy in any sense. Okay, instead of sitting at home doing nothing, based on the numbers that we are seeing, we saw growth in many sectors. We saw growth in terms of number of investors, in terms of their quantum of investment, and in terms of their age bands as well. So we've seen growth in terms of quality and demography involved. In terms of quality, what's reassuring is that we have witnessed increase in investment holding amounts for all investment ranges, with the most significant part in the 1,000 to 50,000 range. So what this could possibly mean is that there has been an increase in awareness, obviously. The increase in awareness in terms of UTS and PRS could have come because people are also aware about their retirement needs, saving needs, long-term investing, dollar cost averaging, and possible acknowledgement of very beneficial point of investing in UTS and PRS. So that's a good sign when we see this growth in all segments. Another point could also be because of simplification of access. As mentioned in the survey, 10 years ago, there were only 33,000 investors with online access to their unit holders' investments. Today, we are looking at almost 1 million people having, it's about 30 times that amount, okay? So we've seen significant growth in those segments. And in terms of demographic age group, we are seeing a good growth in all groups as well. So whether you are a youngster, you are in the silver age economy or so on, there is this growth in population and the shift in society's preference. Next slide, please. Sorry, the challenge of doing this virtually is you always have this slight time lag when moving through slides. So anyway, on the preference note, one inference that I would like to draw from the survey is on the shift in NAV contribution among the various investor segments. While retail investors continue to remain as the largest contributor in terms of NAV, the contribution amount by high net worth investors have doubled. And I seriously hope that this is a result of their past UT investments when they were retail investors. We don't have those empirical evidence to back that up, but definitely that will be an area that we will probe further in future research. The last stats I would like to share is in terms of access to online portals for UT investments. As mentioned earlier, we have got 9.2 million investors with online access today, compared to 330,000 a decade ago. This 30 times increase, I would like to believe, has got no absolute correlation to people playing Angry Birds in 2011, mastering Candy Crush in 2012, or playing Valorant today, but more of the ability of the unit trust industry in embracing technology and imparting it to investors in a user-friendly manner. At FIMM, we too have changed our approach where we have gone down the digital route. It has not been perfect smooth sailing. We are still facing challenges in digitizing or automating certain things. But what is quite evident is we have provided some options in terms of industry education, as in your online exams, supervision, procurement, and even the recruitment exercises. Next slide, please. I won't touch more on the next three slides, which is basically pages 41 to 43 of the survey report. What these slides tells about is what we intend to do to help the industry within the next 2 to 3 years. Once again, I would like to thank the industry, yourself, and everyone else for contributing to our cause and participating in today's event. We look forward to hearing more views from you all in future. So with that, I would like to hand this back to Steve and my other panelists. Back to you, Steve.
Yeah, thanks, Kaleon. Thanks for sharing the very, very comprehensive survey. We are moving to the panel discussion right now. I'd like to invite Mr. Kaleon, Munirah, and Mr. Danny Wong to stand by. Okay. Before this, I was looking at the program. I noticed the previous session, the discussion points were actually quite similar to our discussion here. So I'm going to try to skew a little bit away from all the general stuff. We're going to break the discussion into three parts, chronologically, pre-pandemic, during the pandemic, and now, since the government is opening up the borders, or slowly opening the border, allowing people to move around, is it any different? So we'll split into three parts, and we're going to have a special focus on the consultants. Okay, what the companies, what the fund houses are doing to support the consultants, to enable the consultants to service their client better. Okay, so let me start by talking about the growth over the last 10 years. Why was it so phenomenal? And was there any pivotal moment? Was there any driver that caused the institutionalization of savings into funds, into unit trust schemes, and other form of collective investment? Shall we start with Munirah? Yeah.
Sure. Thanks, Steve. Can you hear me?
Yep. Loud and clear.
Oh.
Tell us why you grew so big over the last 10 years.
I would probably attribute it to three main reasons. Yeah. Mm-hmm. And the first is the rise of middle income.
Okay.
So when you think about it, the Gen Y that we call Gen Y, young people, yeah, are actually now, in the years of 26 years old to 40 years old, right? So there's a rise in middle income. They have moved from being youngsters to now, all the way in the employment workforce. And Gen X is anywhere between 41 to 56 years old, right? So this rise in middle income and a shift in demography has resulted in, people thinking more about their financial security and savings, etc. I won't belabor too much about this topic because I think Kaleon touched about this. And second point is actually on diversification of investments. I think, traditionally we've been more exposed to Malaysian stock market or Malaysian bonds. But, in this last 10 years, there's been a huge shift into diversification into, other regions and other types of asset classes as well. So this big shift is not to be underestimated because obviously the universe, the world is now really our oyster, right? Can invest anywhere in the world, right? Whether it's funds, whether it's stock market, people can go on, internet trading and just buy, whatever stocks they wish around the world and funds as well, right? So I think this big shift into globalization is not to be underestimated and hence, couple that with a rising middle income and better, disposable income, people have more choices. And the third one, which is, probably still early, early in this last 2-3 years that we've seen an explosion, undeniably is digitization. Undeniably is digitization. And we saw, a lot more of this uptick in this last couple of years. I can tell you, Principal, we've been around for a while, but I can tell you in the last 7 months, we've acquired 1.7 million new customers. Right?
Wow.
So partnership on our platform on TNGD, we now have more than 2 million customers actually. So it is in like 7 months, you can believe it, right? We've acquired like 1.65 million customers, close to 1.7 million. So it's an explosion of digitization and digital opportunities.
Do you have digital campaign? I mean, how do you acquire this 1.7? I'm quite curious.
Of course, right? Okay, so if you think about it, I'm quite philosophical about this. We are in many segments of the society of Malaysians. So we have been traditionally in institutional, corporates, high net worth, private banking, etc., right? But we are actually now in every segment of the market, right? So the mass market. And I think, it's not just about digital marketing campaign, right? It's about financial inclusivity, right? You can start investing as low as 10 ringgit.
Yeah.
And powerful, right? And so I think, Malaysians already, there is a market that needs a lot more financial education. And that's where, players like us have a big to play, right? I won't, talking about sustainability, I saw a topic just now, your point, right? Financial inclusivity is a very strong pillar of that ES and G, right? And couple that with the rise of middle income, I think, maybe 10 years from now, Kaleon's numbers are going to look phenomenal, right? Is how are our unit trust consultants, grabbing that opportunity. What it shows is that the market is large.
Yeah.
The market is large is about us educating them and it's about us reaching out. So I'm very optimistic.
Can I just clarify with you? I left active fund management for quite a while. I'm in training right now. Are the fund houses still restricted by 50% of their total fund regards to investment offshore? Still,
yes.
But it's sufficient room for fund houses like yourself to offer other products that invest offshore.
Yeah, because the base is bigger, right? So no problem.
Okay. Danny, do you have? Okay, Puan Munirah is talking about rising middle class, the need to diversification, or the investors' awareness or growing awareness that they need to diversify their investment from properties, from FD to maybe some sort of liquid investment like UT and digitalization. Do you have similar experience with Puan Munirah, or your experience is different?
Slightly different.
Pre-pandemic.
Yeah, slightly different, for us, actually, we don't have the luxury to service everyone.
Okay.
And we are very focused. As you can see just now on the slide, that there are certain segment of the market actually need a very high attention. Typically, those are high net worth. And because we don't have the mass servicing agency system or whatnot, we are very focused on our own in-house sales staff. So they are salary staff. So we're very focused on high net worth market. And the high net worth market is very different from the mass market. So though I think even it's a high net worth market, we are still embrace digital into servicing clients, but we are using the we call a hybrid approach with the high net worth, high touch and high tech approach, right? So for that, we are still going to it. I think most of things is already similar to what Munirah has said. But what I want to touch on is actually the past 10 years has changed a lot. Other than the investor profile and market development, I think the regulation as well as the product offering is also a lot more different, right? So we can see from conventionally people are just talk about either you buy a bond or you buy equity funds. But nowadays it's different. Now pre-pandemic, you can see actually even the CMMP2 already mentioned about VC, PE, which is private equity, and then pre-IPO, and then subsequent to corporate exercise and whatnot to high net worth investors to keep the capital intact in domestic market. And similarly to bond market, you will have the, like the fundraising and the velocity and depth into the bond market. So the launch of Lola in 2015, very helpful because that opened up the normal retail funds to wholesale fund. And the wholesale fund you can design in such a way that suit certain niche and certain risk profile of investors, which is totally different from the retails. And that actually opened up the market to our local investors to buy into local product and not without going to offshore. And that actually boosts up a lot of our product offering. It's no more like just conventional equity and bond. It actually go many things that is not traditionally cannot be found here. From share, REITs, derivative, ETF, specs, all sorts of things we can do.
Okay. So if I were to sum it up, I think principle was essentially fighting an all-out war. They're fighting a big battle. They have a very big army of big battalions. Whereas Areca, being a boutique house, you guys were fighting a guerrilla warfare. You're targeting the high net worth. You didn't quite bother about the mass market, the 10,000, 20,000 kind of market. Okay. Yeah.
Steve. Yeah. Not quite correct, actually.
Okay.
Not quite correct.
Enlighten me.
Yes, we are in various market segments.
Okay.
When you talk about what we have learned in this, a pivotal point is actually customer experience. I know it can be just, words, but the truth is, we are not a very big country. We only have 32 million people, right? And we are in all segments, actually. So the high segment, we are very big as well. And I do agree with Danny, right? It allows us differentiation. So more this market tends to be more, digitally advised and digitally enabled. But for the high net worth market, right? I mean, I'm, we're very into this market actually, right? So the private banking as well as our consultants, right? And we see an explosion in this as well. And I can tell you, like maybe 5 years ago, our ticket size, right, in this segment has just jumped by, 3 times more, right, per customer, 3 to 4 times.
From what level to what level?
Oh, that one cannot tell us secret.
Okay.
But it has easily jumped 3 to 4 times. Average ticket size per customer, average portfolio size per customer, and healthy jump, right? Meaning, right, our consultants are able to really cater for the kind of investment needs that customers are asking for. But more as an industry as a whole, right? Not just about principal, industry as a whole, this is a ripe market, and it's really important that we are able to differentiate how you serve different markets. This is a really important point.
Yeah.
Because if we are to serve, for consultants especially, right, to serve this market segment, right, they need choices. They need choices, they need tools, they need skills, and they need professionalism.
Okay.
Differentiation in serving this market segment is key if you are to go bigger in this industry.
So essentially what you're saying is with all these strategies, you manage to deepen the customer's pocket.
Yes, I can tell you, for example, right, the opportunity to our consultants, for example, right, you look at some of our banking partners, and we're very big with the banking partners as well. You know, I can tell you that, you know, the kind of numbers that I'm looking at on their 5-year CAGR is like 25%, right? And the industry is growing about 7-something%, right? And the wealth in our banking partners for unit trusts specifically, the CAGR there is like 25%. That, you know, it is ripe. These high net worth individuals are looking for advice.
Yeah.
It is for us to lose if you don't grab the opportunity.
Yeah. Okay, let's move to the chronological. Let's move to March last year. Okay, we were shocked back in those days. I mean, in addition to being shocked by the market collapse, we were also shocked by the ferocity of how the pandemic has spread. Okay, we cannot go to office. You know, we are scared. What did we learn? I mean, were you shocked? And what I'm a member of the crisis management committee of my company. So we have to have frequent meeting to talk about how to service client, who should stay at home, who should be going to the office. You know, are we going to have an alternative site to support for all the support function? You know, all these things. Share with us. Maybe I'll start with Danny this round. What did you all do? You know, at the advent of the pandemic.
One of the beautiful points and advantage to a boutique and a niche house for us is that we have small numbers.
Yeah.
Even our investors, we only have less than 1,000 investors to care. So within one day, in fact, just 1.5 days, we contact everyone.
Okay.
So I think to reach out our sales staff, to reach out our clients is not really that difficult because we only have that handful of numbers. And also in terms of the practicality, because we don't have to contact so many people, so a simple call through within 5 minutes, we can reach all our consultants and all our staff, you see. And then furthermore, we just brief them maybe another 10-20 minutes. What should we do? Because we're used to those things. Actually, this pandemic, I would say during the March and April, it was a wonderful time for us. We see plenty of opportunity. We go all out because our culture is very much like, you know, we rather serve the investor when they need us than the normal days. Normal days, I don't need us. You know, they're very, very bullish day, then they will do they know what to do. But only disaster crisis time, they need some kind of advice, you know, to avoid panic selling, to avoid what kind of mistakes will be made because of emotion. And that's the time that we handheld them, and then we hold them throughout this thing. So I must say it's very, very, very fruitful experience to us because we remain very nimble and niche and on the size. That's a very good experience for us.
Yeah, I've been in sales before. I can't agree with you more. During crisis, the best thing to do is to handhold your customer. A lot of salespeople don't do that, and they just lose the trust of the customers from there on.
Exactly.
Yeah, maybe Hwang, tell us what did you all experience? I mean, did you panic?
No,
you have a very much larger team to manage. You know, you'll be wondering whether they're staying at home, whether they're working or not. You know, that kind of stuff.
Actually, right, I echo Danny. It has been a phenomenal year. It's been a really, I don't want to jinx it, but it's been a phenomenal year. 2 years actually. It's been a phenomenal couple of years, right? I'll just share some of our stories, right? When the pandemic hit, we were lucky because in the last 3 years we have been really focusing a lot of resource and budget into digitalization. Okay.
Digitalization. Okay.
Yes. So when this happened, right, we've already moved our customer to cloud, and you know our cloud customer service is already in cloud, and therefore, you know, I can tell you, and until today, we are under 10%. You know, only 5% are really physically at the office. Because we have done that work, right? So customer service is on cloud, and you know, we had hundreds, maybe 1,000 webinars. I'm not sure how many, but tons of those, right? We upgraded everyone's laptops, so everyone had a new laptop, and are connected, whether it's Teams or Zoom. So digitally connected, we were very lucky because when that pandemic happened, thank God we were already ready for it, right? Of the back end as well as, for all staff. And what it forces us is for the consultants, for example, we rolled out this thing called Principal Direct Access or PDA. It forces people to have that paradigm shift and do all their transactions on the platform. I can tell you in this last maybe 9 months, we've seen, about 72% in adoption rate for our digital platform for our consultants. It's a brilliant, jump because customers also are gaining confidence, transacting on digitally. So I think, like the title goes, right, every crisis breeds opportunities. It forces you to really make do with what you have and be really good at it.
You had a digital strategy before the pandemic, and the pandemic just served the test bed on a silver platter to you, right? Am I right?
Yeah, but it's not a silver platter. I think
Okay.
you would say that they really work very, very hard,
Okay.
and it's quite amazing, right? Because
Yeah.
what used to be just one small digital team has really changed the paradigm shift of the entire company, right?
Yeah.
In fact, my vision is that we want to be a digital company that serves all market segments, and we want to be known for that.
Yeah. I just want to touch a little bit on the opportunity during the pandemic, as most of the central bankers in the world, be it Fed or the BOJ, everybody is like slashing interest rate to almost zero, and that has prompted a lot of FD monies to flow into other products in search of yield. And because of the QE, all the massive QE done by either developed China or developing country, that has prompted, given equity market a booster. So tell us whether that has helped you. How has that helped you, Wong?
Definitely, right? Globally, when yields are low, and in Malaysia, when yields are low, there's a hunger for that positive delta to current low yields, right? And so there's a drive for that. And I think it has really helped us. We've seen this last couple of years being really very strong. Equities, actually, like very strong. And certain, mega trends, right? Like technology and healthcare obviously has prompted, that rush into equities as well. But this sort of trends, right, will continue to stay. And investors, especially high net worth, are a lot more financially or investment educated these days, and they do watch this. So I think, this backdrop of low interest rates and low yields has certainly fueled, record high, to your point, right, to many fund management houses, record high inflows, and I think it will continue. But going into, the next couple of years, we still think this 2022 will still be an equities year. There's a plethora of products, right, into mixed asset, etc. But what's important, I think, for investors is that to really know what is your core holding, right? What is your real main goals, and have that core holdings, right? It's in Malaysian ringgit currency or some other currencies that you're exposed in, for education or for investments. Know your core holdings, and you can have as many tactical or satellite strategies as you wish. But knowing what's your core is key. And we need our consultants and our fund management houses like ourselves to really propagate this. Because when you have good core holdings, no matter how the market does, right, you will be protected, right? There are various really good asset allocation strategies, and we need to educate people more about this.
Yeah. Danny, in terms of investment side, what is your experience? I'm sure when the market was up, I know you guys are pretty active with all these deals. Did you see a picked up on these kind of activities or some? Basically, in search of yield, the customers are getting more and more edgy, more and more willing to take extra risk for a increased return and yield. Yeah.
Yeah, from the high level perspective, I think they know the staff, they are very informed. So I think one of the things is actually to share a pocket. I think they will just top up and top up and top up, you know, when they make money elsewhere. And then you look at the banking deposits. I think today we have about 2 trillion deposits there in total, right? 10% of it is actually 200 billion. And our NAV is only half a trillion, 500 billion. You just imagine that's a 10% of total deposit is 40% of our total NAV, you know. Yeah. So there's plenty opportunity for our consultants to go after. I mean, the market is there, the products are there, you know, and people are getting more sophisticated and more knowledgeable. So naturally, you don't offer, somebody will offer them. If nobody will offer them, they will go elsewhere, you know. So we have to do our job to service them, and then the pie is big enough for everyone. You know, it's huge enough for everyone, and the consultant must do this, you know, to align, to upskill ourselves, to do all the things. I can see Malaysian a little bit more, I would say, not so aggressive, right? Not so aggressive. So they're actually in conventional, because people taught us, you know, from the very old days in the 70s or 60s, those are, I say, older generation. The parents just say, put your money in the savings account. That's it. But today is different. Today, you can see, hey, invest your money. Not so much at the deposit anymore. Things change. That's why you can see the millennium started to see things differently from our own generation, which are those are 60, 50, you know, totally different. So there's a move in this kind of landscape, and I can see like what Munirah say. So long as you know your asset allocation, you know your target, you know a tactical play, I think everything will be fine. The only thing is that you need to for as a consultant, you need to be close to investors. Then the trust is very important.
When you say,
I think Steve, to add, right, Steve, this is really important, right? It's really important because we are a core fund manager for at least 3 banks, right? Where we've come up with asset allocation products. We also have this for our agency force, right? And that when customer does their, you know, risk assessment, you know, let's say the customer wants between 6 to 8% consistently, as long as he can, right? I think that core holding is important. And I think we need to advise more of that, because, you know, you need to leave that kind of asset allocation work to experienced fund managers like ourselves, right? Or any of the other fund managers. And having that steady, consistent return is increasingly very, very popular. We've seen, you know, huge flows into our asset allocation strategies.
Okay. It's like umbrella fund. Are you talking about umbrella fund or something like that? A fund of funds?
Yeah, something like umbrella funds, right? Or target risk type of funds, right? And it used to be quite boring, but no longer anymore, because, you know, we noticed that high net worth investors like this type for their steady income type of return, and then they can have other satellite strategies that can put in, you know, global technology funds or whatever that is, right? But in the core, you know, they have portfolios or products that give them a consistent return in the long term.
Well, organizer just remind me I've got 4 minutes left. I got a shot. I thought I got 1 hour. Okay, let's take. I'll wrap it up later. Let's take a question from the floor. Okay, this is from anonymous. This person wants to ask. Okay, as usual, this question always popped up. I want to ask, how about unit trust? I think what he meant is unit trust wrapped in crypto assets wrapped in unit trust. Are you guys doing it?
Let me answer this. I think anything is possible in future, because unit trust is just a tool. We can democratizing anything in a big way to offering to a small, into the retail market, provided the investor must understand the risk of it, right? You want to go into crypto, you want to go into whichever, go on, right? But be careful of the risk, be worried about the risk, and not just returns. So today is 60,000, doesn't mean that it will stay 60,000 there, right? In terms of price, it may go down further for Bitcoins, for example, right? So with the open eyes, with the risk, understand the downside and upside, and of course don't risk all your money lah. So long as you know what is it, we can do anything. Just let us know as a fund house. We just democratizing everything that we can do, provided of course within the framework of SC, right? So that's why I like wholesale fund, because wholesale fund you can structure in such a way that you cut off those who are retail investors, which is actually may not in general, not all in general, they may not understand risk that well. But high number of people, they do business, they are highly educated, they understand the risk. For that, they can open up anything for them. So this is something that I like.
Yeah, I think what Anonymous is asking is essentially, I'm interested to buy crypto, okay, but I'm not comfortable with all the platforms out there. Can you guys, industrial player, I mean the fund houses, come in, wrap it, and do the duty for us, so that we as an individual investor, we feel a bit more comfortable buying into a volatile assets being wrapped in by a reputable house like Areca and Principal. Would you consider something like that? I think they probably want an answer that you would consider doing something like that. Maybe
Munirah will share more, but let me say something. There's something that I don't understand totally, and something that I cannot stomach the risk, I will not do it.
Okay.
So something must be of fundamental right, and then can be accessed into the valuation, then I will do it. Now you're talking about some crypto that I cannot access their fundamental of it. I don't know what is underlying. I will not do it. For simplicity, I cannot answer the question.
Munirah?
I mean, I would agree with Danny, right? Trust is just a way of structuring things, and whether we want to go into the underlying, right? And we need to understand the underlying. But what I do like about the technology is the tokenization technology. So we're always studying trends and we're always studying products, right? I think when we are more confident about what is the underlying, but for now, not immediately.
Okay, fair enough. Okay, whoever is asking this question, you heard it. Okay, okay. Unfortunately, I can't take this question because the organizer has reminded me I only have 1 hour. I'm going to give the panelists an opportunity to say something to the consultant, especially. Okay, we start with Munirah. If you were to tell the consultant, okay, Danny had just said there are how many trillions of savings in the market. What is your advice to them? Okay, yes, we heard upskill consultants and all that kind of stuff. What are you doing to support them? And in what areas should they upskill? Yeah.
Okay, if I were to advise consultants, right, I would say this one thing. Longer about quantity of customers, acquire. Because large quantities of customers can be acquired through digital mass market platforms. But for consultants, it's about the quality of the customers that you bring in and the quality of advice that you impart to the customer. But it's very important, because if consultants, unit trust consultants or PRS consultants continue to be relevant, we really need to be, embracing financial planning, embracing holistic advice. And I can tell you that I just shared some numbers, right? How, the preferred segments in banks have grown like 25% in 5-year CAGR type of numbers, right? And all the statistics that we shared, the market is ripe. Are waiting to be approached. But we need to approach them with, professionalism and skills. And as I mentioned, we have provided ours with digital platforms so that they can spend time advising and giving, good planning for longer term. I just want to say this, right? On top of this rising middle income is also income replacement ratio. So retirement needs is going to be really, really critical, right? Malaysia will turn aged society, depends on which report you read, 2030 or 2040, right? And so we all know the statistics at EPF, how retirement is not enough. And reality, right? Our income replacement ratio in Malaysia is only 30%. What is income replacement ratio? Whatever you earn today, right? You need about 70% of what you earn today to support you in retirement. So do the math. If you earn 10,000, you need 7,000 monthly in retirement. Do we have it? We don't. We're only at 30%. So I will leave that to the consultants as my final parting words, that the market is for us to seize the day, and all the best because the oyster, the world.
Where is your oyster?
Yeah.
Danny,
Yeah, I totally agree with all those things, but I think we as a human, we have only 24 hours a day.
Yeah.
There's so many things to learn, and so many words and so many messages say, hey, upskill, development. I think we have just that much of hours to learn.
Yeah.
We have to work, cannot be work in silo and isolated from the rest. Work in a team, right? Important, spend more time to service and to hold our investors' hand. I think with the trust, then you work in the team. If you are weak in certain things, or technical knowledge, for example, product knowledge, it's okay. We have the technical team to help. All houses have this. No worry about that. Important is actually we must hold on to our code of ethics, do professional services to them, right? And gain the trust, because unit trust, the basis of unit trust beside the performance, the backbone is trust. The trust. You must earn the trust so that people will continue investing with us and continue like our partner. They will hold life and for generations to come. Trust is important. Spend time with investors. The skill is okay to really earn, to learn, right? But important, don't compromise on the time to service investors. That's all I want to share.
Okay, thanks, Danny. I'm sorry, Kaleon, I left you in the cold because I just got the brain of these two veterans. Do you have anything to say to consultants?
Just a quick one. I just want to end this session on a reassuring note. Throughout this whole pandemic, FIMM has not received any complaints in regards to switching, investment, and also redemptions. So I hope that trend continues. And this is also to give assurance to not just the consultants, but to investors that it's very much BAU in terms of all the members and distributors. So with that, thank you again. Happy investing.
Yeah. Okay. Before I end this session, I just want to say one thing, because I just recently read something. You look at US, it's a very developed country. Okay, there is a lot of robo-advisors, there are a lot of digitalization, a lot of platforms to either trade shares, bonds. You have Robinhood, you have Ameritrade, TD Ameritrades and all that. But when I saw that number, I got a shock, because I forgot a number is in the trillions. There are still trillions of assets that are being managed by FAs, financial advisors. This is US, it's a very, very, in terms of capital market, is at the forefront. Even after so many years of evolution, changes and all that, a lot of money is still being controlled by IFA, independent financial advisors. So if you're a consultant, don't think robo-advisors and all this digitalization is going to be a threat. They should complement your process. I just want to add one more thing. Is essentially, to me, is how you connect with the client. So if you want to connect with the client, you must learn to be a conversationalist. You must be able to conduct a conversation. So you must be well-read. You must know a lot of things. You can't be talking about investment all the time. Trust is being earned from exchanging views about politics, social, food, shopping, whatever, So read widely. Okay. So that is coming to the end. Given the time allotted, we have come to the end of this session. Every crisis breeds opportunity. Hope as an investor or a consultant, you have garnered or gathered some pointers to help you navigate, hopefully not so troubled water going forward. My sincere thanks and appreciation to the panelists, Encik Kaleon, Puan Munirah, and Mr. Danny Wong for sharing your thoughts on the various areas that we just covered. Good luck in your investment journey going forward, and please stay safe when you're going about town shopping, because I just went to 1U over the weekend and I couldn't find a parking. Everything has gone back to normal. It's amazing. Okay, thanks and goodbye.
Thank you.
Thank you very much. Thank you.